Hello and welcome, everyone. It is Saturday, the 11th of October, and this is my weekly performance summary. My name is Jason Allen Jankowski. I'm a full time trader. Uh, I tend to focus on foreign currencies for this broadcast, as that seems to be the most popular way for people to get introduced to this business. But if you're following along in real time to see how my performance is, I want you to know that the method that I use is applicable to all markets that are traded. Um, all the details of what I do and how I do it are on my website, netwinningtrader.com. And I can also be reached personally if you're interested and you'd like to take a few minutes to talk about your trading and what you want to improve. Feel free to consider me your friend in the business. Let's go ahead and get started. Today's weekly performance summary is for the week ending today, the 11th of October. And again, I'm your host, Jason Allen at Net Winning Trader. Let's go ahead and get right to work. Now, here's how I do this for you guys that are new listeners: is I start with what I call the numbers, which are closed positions. We still have active positions on. I'll get to that next. So when we talk about closed trades, this is what happened this week from Monday till Friday, closed. And that may have included trades from previous week or two or whatever. But in any case, here's where they are. Total long trades of 6, total short trades 14, total trades 20. Now I'm going to show you all these trades in just a minute on the charts, but I want you to understand this week was an aberration kind of week. It wasn't typical. This is a lot of trading for my performance method. In other words, when we look at the Pro Trader's Toolbox, which is what I call my proprietary method of executing, it doesn't usually typically execute this often in one week. So this is a little different. So these trades that happened here, a lot of these are in response to signals coming on, trades not working, new signal right away, trade not working, signal right away. I'll show you all that in a minute. But net was not a good week for closed trades. Long trades lost 5 of them. Short trades lost 12 of them. So out of 20 trades, 17 losers. Very unusual for what I do. And the total pips, though, are right on beam. In other words, if you look at the total pips lost, 683.6, and say, wow, that's a lot of pips lost. If you divide that total between 17 trades, the average loss is exactly on track for the discipline required to win using the system. Now, what I mean by that is this. If we look at the winning positions, only 3 winners, but there were a total of 168.6. That's still within the probability of ruin matrix per trade. Now, one of the things I want to remind you is that the probability of ruin matrix isn't something we can talk about in here. It is part of the protocols that is taught at Net Winning Trader. But I think it's important for you to understand that even though this week was a big losing week when it comes to closed trades, I mean, that's a measurable percent. I think on my model account that I use for this, 8% loss for the week. That's big. Um, but in any case, the interesting part is the discipline of the loss level being per trade. In other words, the discipline that you have to make a systemized approach work. There has to be things that are immutable within that system. One of the things is your losses have to be according to the limits and methods that you've chosen to work with. In other words, you can never, ever increase your risk, overtrade, change the pip size, change the account size, change your trade size. It all has to be identical on every entry because if you have to take a loss, it needs to be a measurable thing that's always the same so that when you're winning, you can make more money than you give back on your losers according to the probabilities of your system. So in this case, even though it was a big week for losses, each loss was still right on program method. Pips were still not good. Normally, this number here would be closer to 200 to 225. So even though trades came off that were winners, they weren't real big ones. But when you look at the entire put together the way it's supposed to be, this is what I want to show you next. Our open trades. Pounds, long from almost the perfect bottom. Open trade pips are only about 50 there, but it's still working. Euro's a little better and from a low print. The big one is Japanese yen. I've got short yen twice, both from virtually the highs of the move. And we're looking to add to this one again next week. But look at these open trade gains here. And then Canada, as always, just kind of dragging up the rear. Only about 11 points there. But again, from the high though. But when we talk about charting and all the rest, I'll get to that in just a second, show you what's going on here. The important thing to remember, and this is the critical thing, even though the net loss for the week was 515 pips, open trade equity going into the weekend is almost the same amount, which means basically the systemized approach is working perfectly, but it's due to the discipline of the trader. In other words, when you have a big losing week, you have big temptations emotionally in there that everyone has. Oh my God, I got to get this money back. I can't believe they're coming together this bad. What am I doing wrong? What should I fix? All this stuff starts happening in your head. And then you start doing stupid stuff like increasing trade size, over trading, right? What else do you tend to do? Take off your gains right away to kind of chip away at your losses. Hopefully that'll make it easier. You get reduced the risk a little bit. You feel good because you got some winners under the belt. All that is what leads to net losses consistently. What I teach at Net Winning Trader is discipline to maintain the probabilities as absolutely the perfect way you can. And it's because of that discipline that the situation that was initially would have been seen as quite problematic to most traders. A big loss. Open trade gains are making that back. You look at the situation from Friday to Monday. I'm down 35 points, 45 points. Going into next week, I've got a lead on some trades that could be huge. So if all I do now is add to the winners and wait, I'll have another 1,000, 2,000 pip winning month easily. You see what I'm getting at? So this is why I tell people when we talk about systemized approaches and all the rest, the big mistake people make, most traders make, is they keep thinking they got to find a way to make really good entries. It's not about really good entries. The money is in really good exits. Controlling your losses to a fixed amount all the time. It never varies. Even when it's a bunch of them in a row, you have to maintain that discipline. Then you got to let your profits run. So when the profits are running, you hold those trades. You wait. You roll a protective stop underneath to lock some of those profits, let it ride, and let it go, see how far it's going to go. Eventually, when you're taken out of that trade, it'll be because the market quality changed and you were protected with an open trade gain that was substantially bigger than your losses were on the way up to that point. But you don't have to make that decision. You just let the market work. You see what I'm saying? So that being said, basically what started out as a rough week ended up becoming a typical week. And now we're going to head into making some real money next week. So let me show you what we're holding into the weekend. Starting with pounds. And let me turn on my orange thingy here. There we are. Was it working? There we are. Okay. Came in short up here, as you can see, right? And trade was working. And then this right here, this was um, this was my trading error for the week. Right here. This is the one mistake I made for the week. Is I took off the short side at a reasonable profit when the market bounced from this. What do you call this here? Uh, I think this was the Tuesday low. I think it was this Tuesday low. May have been Wednesday morning when the market bounced. I had rolled a protective stop in, and I rolled the stop aggressively because my assumption was if we bounced off of the support area that is, you can't see it because it's to the left of the screen over here. If we bounced off of that, I was looking for that to be, a rally out of the hole, and I was hoping to have one of these on. So this is what happened. Since I didn't have the short side on, what happened? Which I should have had the short side on. What happened? Well, when the X reversal came in on the buy side, we bought it, and it didn't work. There's a loss. Another one came on, bought it again. This time, had the extra help of nailing the next support level. And then that one didn't work. See, you buy it and you put the stop out of range, right, underneath the support level. That didn't work. And we have another H reversal right here. Put a long on. That didn't work. So look at these losses that were piling up. Whereas if I would have just left the open trade short on, as per the protocols, instead of thinking I knew what I was doing, I'd have been short all the way through all that until we got to here. And what would have been the difference? Instead of taking a small gain and lots of little losses, I would have taken lots of little losses with one big gain to overcome all that, and I'd be long from the bottom of the move. So you see how obeying the rules is better than thinking you know what you're doing. If I would have just let this stop roll where it was supposed to be break even. I said, you know what, this looks like if it's going to bounce off of here, so I'm thinking in my head, it could really rage. I better just lock a little of this. Stupid move. The rule was don't think. That's the rule. Don't think. Stop thinking. Just follow the rules. So that's why we had a problem for the week. So can you see how a systemized approach followed systematically is better than a trader trying to do this, even if the signals are great signals? Even if they are, just don't try. It's not about the entry. It's about the exit. So in any case, what could have been a really nice flat ride with a nice open trade gain to start next week, I've got four, 1, 2, 3, 4. Yeah, 1, 2, 3. Well, yeah, 1, 2, 3 losers against one small winner for a net loss in the pair, as opposed to winning. Just a little frustrating there. Now, same story in euro. Came in flat, or I'm sorry, came in short from last week. Here's the shorts up here, right? And instead of just holding it and letting it roll all the way to the bottom, right? Right here, which by the way, this is a 60-minute chart. This reversal pattern that you see right down here at the very bottom at 1540 area, this reversal pattern was a hook reversal on the 120-minute chart and the 180 and the 240. So in other words, the trade was heavily congruent to go long at the bottom. The 60-minute chart didn't have a signal though. So look at how this worked. Just frustrating, as you can imagine. It came in short and did the same thing. I said, look, if we hit this bottom right here, it's going to bounce, it's going to rage. So what I do, I went long down there, covered the short. Look at how close these two were. The stop for the short was right at the exit price that I put on, and then the market failed. So now I'm long at the bottom while the market's making new lows. And there's my exit stop here, right? And then again, exact same situation developed here, and then took the loss here. And again, so I had 3 losses, 1 small gain, and then at the very, very bottom, like I said right here on the 120 minute, this was The higher time frames were highly congruent with the signal, so I took it. And that was the absolute bottom. So now I got to break even, stop working, which is the protocol. And now there's nothing to do but wait. Now that it's crossing the moving averages, these sell signals are no longer applicable. These right here, and the reason being is that they're what I call wrong-footed. So we'll talk about that some other time. Same thing with these. But right now, the point is long from the bottom with an open trade gain. If I would have done pounds and euro the same way, it would have had virtually no gain or loss in either pair. Probably a small gain, actually. Small gain in both pairs, but both of them long from the bottoms, the weekly bottoms, into next week. But instead, I took losses with a small trade that worked, but it wasn't enough. I should have just been short all the way down, leaving that trade side alone, and then just put the opposite side on the signals, which these weren't really signals, were they? They were guesses. And why were they guesses? Because they were support resistance areas, supposedly from where? From the past. But they weren't support and resistance areas today, and that's the price you pay. Down here, though, when their signals came on across all the time frames, that's the opportunity. You should have waited for that. So, do you see where discipline creates the opportunity, not the market? It doesn't matter what the market does, it only matters what I do. So, discipline would have paid off again in both of these pairs to start. Now, let's take a look at yen, which was this is one I'm going to put in the book. Actually, this week is the one I'm going to put in the book. All right, here's a flat into this week. Here's the first round of sell signals. 150.29. Right here. Out on an attempt at new highs, right? And then I don't know if you can see, you can't really see them real well, but they're right in here. There's H, 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 H. I want you to count them. 1, 2, 3, 4, 5, 6, 7 sell side signals when this market just went straight up for 3 days. Loss, 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 loss. 6 losses, 7 signals. Last signal comes on. This is it right here. And then I added to it on the way down. Because why? Because we broke through this moving average. Why is that important? Because if you notice, the market was rising all week long, signal after signal after signal, get my ass kicked every time. I didn't have a long on against it. So I had to take every sell signal to get positioned. So there is the move all the way higher, right? With no long on to protect against these boom, 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 boom rapid fire losses. And the market itself stayed above both of the rising moving averages. And then it went into, any of my students out there can recognize this, right? What do we call this? We call this a consolidation high. This is the highest price the market had been at in months, really. And now it's moving sideways for 72 bars, 72 hours. That means the market is balanced order flow. So if the order flow is balanced, that means the buyers are losing control. Sellers are getting interested, and they're matching the buy orders order for order. So instead of it being buyers overwhelming sellers, sellers are now beginning to put the positions on against the buyers that are in size big enough this time. Buyers are backing off. So now what happens is the market tops and it gets a move lower and you get a liquidating break. And that's what happened right here on Friday. We had a liquidating break all the way into the last few minutes of trade on Friday. The buyers just finally threw in the towel, and there's more coming, I think. So the market's settled down, what, 100 and almost 200 points, well, easily 200 points from the high. Now I look at it, 53.20. But anyway, I only had one position on here, but I added to it once we crossed the moving average, because once we crossed the moving average, and by that I mean close below it, Once we close below it and it starts to move, you can see right here, it rolls over and goes sideways right down the middle of this consolidation area. That's just textbook topping. So the market's topping. We're going to have more on. So it's topping from a 6-month high or 7-month high, something like that. So I put another one on, and I'm going to do more next week when we cross back into this area here, I think. We'll cross here, bounce, where we bounce to. That should be a sell signal over here somewhere. And then we'll see if we develop downtrend somewhere along this line. But again, what made the difference here was sticking to the plan, regardless of all the reasons why you're getting your ass kicked over here. The plan is, once the market consolidates into a high, you look for the top, and the top showed up. So if I was all hurting emotionally about all these losses over here and all the other stuff people do, I wouldn't be watching for the top. I would have missed. I might have taken the H anyway here because it was the right thing to do. But it all happened very quickly on the way down. I might have missed the fact that our 50 bar has rolled over into the range and the trade is now below that point, which means there's a real good possibility of top here from a 7-month high or a 6-month high. You really should have, it's not time to be a one lot trader. You know what I'm saying? It's time to try to load for a little bear. So I put 2 on there, and I've got actually plans to put a lot more on as we come off the high. Canada, just boring. Let me get this guy up here. Just boring as hell. Again, thought a top was forming. Why? Right here. Here's the bottom. Here's the top. And we're right down the middle with the averages. So that, to me, looks like a consolidation top from last week. Was short from here, stop up here, right? And also during the week, well, if we're going to break out to the upside here, look at these buy signals, right? That's an unusual formation. They have buy signals like this, just a few bars apart during this consolidation, right off the lows. You know, that could be an opportunity to go long. So I did that last week. I put the long on last week anyway at the top because I thought we were going to have a violent move and it would be better to have both positions on and wait for a breakout of the range. So we got the breakout of the range and the long side worked. And I took the long side off at a profit, right? Stop took me out of the short side, took the long off it again, and then another sell signal, this time from much higher up and at a regular consistently higher price. So I'm thinking this might be the actual top. This move here was the head fake. So we're short, but the market appears to be holding the breakout. Here's your test of potential uptrend right in here. And you came out of there with a buy signal off uptrend. So the trend buy might actually be indicative of these X reversals here being very accurate off the low. So the long side worked, and it's still working, and I took it off. What should be happening here, if I would have followed the protocol perfectly, which I didn't do, would have been this. We would stay long. I wouldn't have taken it off manually. Stay long. The short side would be on against it. So we'd be long from roughly here, right? Because of coming in long, not from the X's. But the X's show us the bottom of where the range might become uptrend. So we had uptrend up to consolidating range, followed by continuation of uptrend. That may be what's happening. So if that's the case, then the way that it could have been played better was to hold the long, put another short on up at the high, and now I got that one in, which, by the way, we haven't been able to move the stop down yet. And then as the market put on this test of trend and a buy signal came on, been time to add to it. Unfortunately, your long position here at 39.70 area, whatever that is right here, that long and this signal here, the new trend signal, are too close together. They're only separated by less than 30 points, 30 pips. So they're too close together to actually consider this as being an opportunity to add. But the protocol is what's important. Noticing the protocol, and then deciding whether or not to trade it is a function of discipline. In this case, I didn't trade it the way I should have. So did I miss an opportunity here? Well, I would have had uh, one loss against a small profit, but the one loss would have been there anyway, and now I'd be in position on both sides with a lock gain. So I think it'd be better if I followed the signals the way I was supposed to. So although this was the possibly considered an error for the week, the real error, as I told you, was earlier. So I made one error taking off the short side of my pounds, and then uh, this one wasn't as big of an error. It's more of a personal choice, but I'm always the hardest on myself. Anyway, so net, you can see where our losses came from, but the discipline to stick with the protocols and the system and work the systems in the long run for the whole week, for the net on the week, it actually paid off. Could have been done a little bit better, so maybe wouldn't have even had those losses for the week, some of them. So again, perfect discipline is the goal of what we're trying to do. Not to be a perfect trader, but to be perfectly disciplined. I tell my students all the time, you can't be a 100% winning trader, but you can be 100% disciplined. Anyone can be 100% disciplined for only one day. Put 5 of those together, you've had a perfectly disciplined week. And I think that's what happened here. I think out of 5 days, 3 of them I traded perfectly on my game, and the other 2 got a little surprised and kind of like slapped on one side, and took me a minute to get it back together, but we're still there. Everything's working just beautifully, actually. Okay, guys, that's it for this week. Thank you for attending. If this is your first time listening or you're new, I'll be posting my performance for the week every Saturday. And if you consider yourself a serious trader, someone who really wants to get, where he needs to go with this, you're looking for better tools. If you're seriously interested in learning how to use those tools more effectively, I've got something for you. Please visit my website, netwinningtrader.com. I also provide a free daily podcast, Traders Daily Discipline. I think you'd love it. You can sign up at the link provided below or through Apple Podcasts, Spotify Podcasts. Just search netwinningtrader.com or search Traders Daily Discipline. You'll find it. The link below goes right to Substack. And that's it, guys. I hope you have a great week next week. I'll be back on the 18th. So in between now and then, I'll see you for our Traders Daily Discipline on Monday the 13th. Between now and then, I hope you enjoy the rest of the weekend. Spend it with friends and family. Forget all about this crazy business. Have some fun. And I'll see you Monday. Thanks.